Hey everybody, how is it going? Well, in this video, I'm going to go over the market averages real quick, and then I'm going to get into the trades that I made today. Now, I'm making this video a little bit earlier in the day, so there is a chance that these, the numbers could change quite drastically, actually, with how volatile the market is. But before I get into any of that, please remember, not a financial advisor. All this is just my opinion. I'm just trying to, give you my opinion on what the heck could be happening next in this crazy market. Now, if you do want to join our little trading group, we do have a link down there in the description for the Patreon, and that is only $10 a month. I am in the Discord every single day, and I also put out a pre-market video just about every single day before the market opens with my watch list and anything else that I might be seeing interesting in the market. So if you are interested in that, link is down there in the description. If you don't mind supporting the channel with a early thumbs up, I would appreciate it. But let's get into this market, and I'm going to start off with the QQQs, and unfortunately, it looks like the QQQs are selling off again. I mean, this was a very short-lived rally. There's a lot of fear out there in the market, and it doesn't appear, as of today anyway, they are letting anybody out of this market. I'm sure a lot of people were just waiting for a decent-sized technical bounce so they could unwind some of their positions. I was considering that depending on the price action, but it doesn't look like we're going to be getting a bounce up into that 200 as of this recording anyway. I mean, things could certainly change, but if we take out the low of yesterday, which was about 340.78 on the QQQ, if I do believe, I think we are probably in big trouble, and we're probably going to be taking out this low. Now, I think with that being said, we are still going to be very close to a tradable bottom. I think, a breakdown below this low of Monday. I think they probably won't be able to send it down too much further than that, at least straight down before we get a reactionary bounce. I think it's probably going to be a little bit of a bear trap. I mean, I think a lot of people are probably going to do some climax selling into that. Maybe some people are going to try to get short, and they're probably going to get burned. But that's just my opinion on how things could end up happening. If we take a look at the stochastics right here, we can see the stochastics have bent back down again. So it definitely looks like the momentum is headed back down to the downside. And if we take a look at the weekly chart of the QQQs, we can see the stochastics has gotten even more bearish. It's even further below that oversold line that the oversold point that it was last week. So you can see we are getting very stretched to the downside. If we get another blast down either tomorrow or next week, I'm definitely going to be buying rather heavily, because I think our bounce is going to be right around the corner. I went over this in some of my other previous videos, but every time the stochastic gets this low, you always get a bounce not very long after. The last time it was this low was at the correction that we had in 2018. And in my opinion, this correction that we're having looks a lot like it, so I wouldn't be a bit surprised if we get one more blast down and then a sharp move up. Next time we were that low on the stochastic, we weren't even that low in 2016, but that was the last time it went below that oversold line on the weekly chart. And as you can see, we had a soft little bounce up, bent back down, and then immediately turned back up. So this little combination wouldn't surprise me at all either if that's what happened. We have to go all the way back to 2012 in order to find the stochastic that was that far down on the weekly chart. But you can see it didn't stay down there for very long, and that was a very good time to be buying equities. So just trying to make that point a little bit clearer, because I know there's a lot of fear in the market, and you are not the only one if you are experiencing it. Nobody likes seeing their positions go down, but unfortunately, that's the way the market is sometimes, and it's actually a healthy thing. I mean, there was an old saying that I remember hearing that was, when markets are crashing, you have to be a buyer. If you are not a buyer, you're not doing your job, because if the world collapses, stock prices are going to be the least of your concern, and if it does rebound, then you were not doing your job. You're supposed to be a buyer when stocks are crashing. That's when you get your best deals. But anyway, let's go take a look at some of the other averages. Let's take a look at the spider. Taking a look at the spider, you can see the very same thing. It made it all the way up to that 8-period exponential moving average today and then just turned around. This is still technically an inside day so far in the spider. So even though it looks nasty ugly, technically it's actually kind of a little bit of a constructive chart pattern. But if we don't get above this 200-period simple moving average quickly, I think it's going to be in trouble. And taking a look at the diamonds, you can see the diamonds also made it just a little bit higher than that 8-period exponential moving average. But as you can see, it's another inside day, even though it is hanging in there, staying green just barely. So the Dow looks a little bit better. And if we look at the IWM, unfortunately, we can see we've already cranked past that low from yesterday, and we are challenging the low from Monday. So that is not a good sign in the IWM. The IWM is definitely the weakest. If we ended up moving past the low of yesterday in the QQQ, I was strongly considering grabbing some downside protection, either buying some options on the SQQQ or maybe just buying the SQQQ by itself. But I definitely wanted some more downside protection in case we did get a fast acceleration to the downside, just to hedge against some of my long positions. But judging by the charts, I think we're hanging in there by a thread, but we are definitely on thin ice at the moment. All right, so let's get into the trades that I made today. I actually made 2 of them, and they were both day trades. And the first one was in ARDS, and I actually recorded this trade from start to finish for the Patreons. And that might have been why I mismanaged it. I was a little tight when I was managing this trade, and maybe it's because I knew I was recording it. Who knows? But either way, I love this pattern in ARDS. I mean, you can see all of this volume coming in, and, it had a pullback yesterday, and it was gapping up today. I knew it was right there at the 50-period simple moving average, but I love the way that it was holding above that 8-period exponential moving average. In fact, I love this pattern for a swing trade if I dare took any swing trades, because it seems like every swing trade, everything they try to break out, at least 8 or 9 things out of 10 that I see that they try to break out, they send it right back down. So in this market, I am just doing day trades until the market proves otherwise. But let's take a look at this one on the 1-minute chart. That's what I traded it on. Let me zoom this sucker out so we can see it just a little bit better. You can see ARDS had that nice gap up. It had a immediate reversal, and then it moved up and started forming a nice consolidation. I saw that this little, let me see right here, was forming a nice little consolidation right here. Let's see if I can get that in there. And that was the ceiling that I had identified. Actually, I think I identified this one right here. All right, that's where I identified the ceiling at. Anyway, I wanted to buy on a breakout, so I bought in here. It executed my order at $2.13. I put my my stop loss right down here below the consolidation, so if it had an immediate turnaround, it was going to stop me out. But the stock started moving up, so I started raising my stop loss, and I actually raised it up here to just under the 8-period exponential moving average. Usually, I keep it a little bit more below that. I want to give it a little bit more breathing room, but I was actually planning on taking profit at $2.24, and it made it just below it. It stopped at $2.23, so that's when I moved my stop loss up, thinking that this was going to be the top and it was going to reverse all the way. So I put in my stop loss at $2.14, and it came down and it hit it. So technically this was a gain. I bought in at $2.13 and sold at $2.14. I consider it a loss, especially since I moved this stop loss up way too fast. And as you can see, it immediately turned around and went past my profit target and made it to about $2.27. So if I'd have been just a little bit more patient, moved it up a little bit slower, I would have been able to absorb this tiny pullback, and I would have been able to get out at the profit that I wanted to. But you never know where it's going to go in the heat of the moment. And actually, King Tommy from the Patreon traded this one as well, and for the 3rd time in a row, he made a decent amount of money on the same stock that I traded. So it's 3 times in a row he has outperformed me. So and maybe I might have to start letting him call out these trades, because he's doing fantastic. But let's get into the other trade. All right, so let's get into that second trade that I made today, and it was in Groupon, ticker symbol GRPN. Now, GRPN wasn't really gapping up that much anyway, but I loved how much accumulation had been going on over the last few days. So if this one was making a bullish pattern, I definitely wanted to take advantage of the momentum that had been piling into this trade. You can see how big the volume is and how it just sent the stock straight up from the low 20s all the way up to almost $30 a share. But let me go to the 5-minute chart and I'll show you how I traded it. All right, well, this was the gap up in the morning right here, and I actually considered buying the breakout, even though the breakout failed, but I was already in that ARDS trade, so I just continued to watch it. It had a pretty steep pullback, but then it started to find support at that 50-period simple moving average. You know, I took a look at it, and it was still following this trend line up, so I took a look and see if I could find a ceiling on it, and I identified this one right here. So if it had a break above this ceiling, I wanted to take that trade. Let me see if I can put that in the right spot. Actually, it was just a little bit higher because I actually put it above that wick right there. But anyway, you get the point. I wanted to buy on a breakout of this little wedge right here, and that's what happened. I put my buy stop at 27.46 maybe, and it executed at 27.55, so not the best execution in the world, but we can see that it worked out because after it stopped me in, it kind of hung around for a minute, and then it found support at that 8-period exponential moving average and started an uptrend, and I ended up getting out at $8 or $28.34, so right about here. We can see if I stayed in the trade a little bit longer, I could have got out quite a bit higher because this thing didn't top out until 29.41. So if I'd have played it perfectly, you know, I could have got out just a little bit higher. But either way, it was a good trade. It made up for my mismanagement of the ARDS trade because that was kind of you know, annoying me after that trade was over. But since I made this trade, kind of makes that trade all better. But those were the trades that I made today. Well, that's all I have for this one, everybody. If you have any questions, please leave them for me down there in the comments section. I'll get to them as soon as I can. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.